What is going on, everybody? Welcome back to Finance with Parks. In today's video, we are going to talk about 3 to 4 index funds, Vanguard specifically, that I recommend for 2022. We're going to talk about what makes them up and what the historical returns have been. Let's get into it. Welcome back to the channel. If you're new here, please consider subscribing. We talk all things personal finance, and we're trying to make it to 1,000 subscribers. So if you could like this video and subscribe to the channel, that would be greatly appreciated. All right, we're just going to jump right in. And first, we're going to start with the VTI, or the Vanguard Total Stock Market ETF. By far, my #1 pick. If you're just thinking about getting started in investing, you cannot go wrong with this option. This is my #1 choice in my 401k. It's my #1 choice in my regular, brokerage accounts. I just can't say enough good things about this. And so for those of you that are not familiar with ETFs or index funds, we're going to switch over to the overview here. And the VTI, it seeks to track the performance of the total US stock market. That's the best way to put it. Vanguard is an institution that instead of you needing to buy thousands of stocks, right? Vanguard has done all the work for you, and they've purchased thousands of these companies that make up the total US stock market into one button press. One purchasing option is the VTI. And so if you scroll down here, you can see the returns associated with this investment. Over a 10-year period, it's returned 16.6%. That is incredible. Normally when you hear investing in the stock market, right? I know the going term for me was always 7 to 9% returns in the long term. And that does balance out in a 20-year period for the most part. But 10 years, almost 17%. You can't complain about that at all. You look at the hypothetical growth of $10,000 if you started with that investment in 2011. It has grown to 44. If I can get to the end here, here's 43,934. Basically $44,000 if you started with 10 grand. You made 33,000 in returns. You scroll down here, and so one of the things about index funds, like I said, right? It is a grouping of stocks packaged together as one option. So you can see here, look at all the great companies you're getting when you buy the VTI. Big name companies. Apple, Microsoft, Google, Amazon, Tesla. All the biggest drivers of the stock market are here in the VTI. So if you're not familiar with, navigating Vanguard's site, I really like these first two tabs. The first gives you an overview of the product summary. The second, this price and performance. It has a very similar chart to the $10,000 graph, right? Or the exact same one on the 10-year. But it also adds, a 5-year hypothetical would have been up to 22,000, 3-year, and 1 year. Also, if you scroll down here, you get the average annual returns broken out here. Over the last year, it's returned 26.5%. It's just a really good year for the stock market in general. Now, that's not to guarantee 2022 is going to look the same because there are a lot of risk factors out there, I know. But for new investors, timing the market is extremely difficult. So if you are looking to get into investing, this is just a phenomenal place to start. All right, so let's continue on. We're going to move to the next one. And we're essentially getting more specific now. So we just started with an index fund that mirrors the total US stock market. Now the VIL, the S&P 500 ETF, we're talking about only the 500 largest companies in the US. So a much smaller subset of what we had in the prior index fund. However, it's still going to be very similar, right? And you'll see that in the returns as we scroll down here. The 10-year, 16.59%. I mean, pretty much spot on with the VTI. $10,000 would have grown to $44,573. So a little bit higher than what we just saw previously, but pretty darn close. The reason for that makes sense, right? The top 500 US companies, they're a pretty major driver of what the total US stock market does in general, right? And if you scroll down, you can see here that it's a very similar listing of companies. Apple, Microsoft, Google, Amazon, Tesla, Nvidia. These top 10 are pretty much exactly the same. The only difference is in the VTI, it has additional stocks that are not in the S&P 500 because it has outside the top 500 US companies. All right, and if we flip over on the price and performance, And we look down here at the chart. I mean, very similar, right? You can see the 1 year 27.87%, so a little bit better than the BTI. The 3 year 20%, 5 year almost 18%, 10 year 16.14%. Since inception in 2010, 15.86%. Really solid investment options. And for those of you that aren't familiar with the math per se of what those returns represent, you can see it in the hypothetical. Hopefully that'll help you. But essentially, just to make it simple, if you started with $100 and got a 15% return, you would multiply your $100 times 1.15, or get you $115. That would be what your total investment is now worth. So you could calculate the delta between the two as $15, obviously, or you can multiply your $100 investment times 0.15 to get you 15. That would get you the gain that you made, or your increase in value. All right, so with those two completed, we've talked about the VTI and we've talked about the VU. If you're a new investor, for me, I would just stop right here. Just pause the video, hop off. You can go to your Robinhood account. The great thing about Vanguard is you can buy these options through any holder. You don't need a specific Vanguard account to purchase these. Go with these two. If you just want to stick with one or the other, that's fine too, because they are very similar, right? If you just want to buy the BTI or the VU, put $250 in there, $500, $1,000, whatever you're comfortable with, because you're going to see growth here. I mean, in the short term, if you're in a 1 to 3 year period, I would be a little careful because you're going to be at high risk if there was a temporary downturn in the market. And like I said, there are some risk factors out there in 2022 right now, which will be a different video. But I will say, if you're going to hold for a 5 to 10 year period, these are by far your best options to start. They're a lot less risky than single stocks too. Yes, you could go put all of your money into Apple, but the great part about index funds is it prevents you from losing all your money, essentially, if Apple or Tesla goes by the wayside tomorrow, because you have all these other companies in your investment as well. All right, so that's my little spiel there, but we'll keep going. If you're looking, to diversify your assets, I stick with the first two, but the next one is going to be the Vanguard Real Estate ETF, the VNQ. And what this is this invests in stocks issued by real estate investment trusts, aka REITs. Really, these are companies that purchase office buildings, hotels, and real property. So now we're getting away from your traditional companies and we're getting more into real estate, commercial real estate. There's probably some residential real estate exposure in this. And the one downside I will say, though, is look at the returns compared to what we saw in the BTI. If you look at the 10-year, only 11.5%, and that doesn't sound like a big difference on the surface, right? 16 or 17 versus 11. But if you look at your hypothetical, you're only up to $28,000. You missed out on 16 grand if you pick the VNQ over the BTI and the VU. And I experienced that the hard way because I had the VNQ in my 401k portfolio and I sold it 2 years later because I didn't want to miss out on $16,000. So that's just something to know. Now, it is good that you're, diversified. Everyone always hears that term, right? Well, you want to have stock market exposure and you want to have some real estate just in case one does better than the other. However, this is pretty clear data, right? Over a 10-year period, only 11.5%. I'm going to take that historical data and say, it doesn't guarantee future returns, but I feel a lot more confident in the VTI than I do with this, just from a return standpoint. If you go to the price and performance here, you see a similar story, right? But the one thing I will highlight, so the 1 year has been better. Over the last year, this VNQ has returned 31.6%. I mean, that's just an absurd number in any stock market return. Now, I know Bitcoin's like over 100% return, but that's a different story as well. But the VNQ, 31%, that is phenomenal. That means if you invested $100, you made 31 or almost 32 bucks this year. You can't complain about that, right? It's just when you look at the 10-year return compared, so when you're looking at a longer term portfolio, you're only at 11% when we saw 16, 17. All right, so that's the VNQ. If you like real estate, this is something you could be really into, right? I mean, maybe this makes more sense to you than the general stock market. You trust real estate more, you can make that decision on your own. but that's a good option too. Okay, now I'd really say we probably stop at 3 that I recommend, because past these 3, you'll start to see the returns come down significantly. The next 2 index funds are going to be an international stock fund and then bonds. And the international stock market fund, people, though going in bias was always, this is a third way to diversify your portfolio, right? You start with the US companies, then you have real estate, and then you have international funds. But if you look here, so just as a summary, the Vanguard Total International Stock ETF, VXUS, it seeks to track the performance of, we're going to skip this part, it measures the investment return of stocks issued by companies located outside of the US. So the easiest way to put that into perspective is if you scroll down here, these 10 largest holdings, so you got Taiwan Semiconductors, Nestle, Samsung, Alibaba, Toyota, Louis Vuitton or LVMH, and Shopify, all big company names, right? Those are all places I'm sure you've heard of before, but they're based outside the US. So this index fund, outside of the VTI, it's essentially its international cousin of a grouping of stocks. And so you can see here, if you flip back, this is also a cool thing to highlight. I should have highlighted earlier. It shows you that the number of stocks here, 7,776. Great thing about index funds, like I said, just a foot stomp, you're getting a huge variety of stocks, which really limits your downside risk. And all that work's done for you. You don't need to go buy and purchase 7,000 individual stocks. Vanguard's done that work for you. But if we scroll back up, like I said, so the return here, now you're in the 8% return rate. That's just not going to cut it. For me, I'm not going to give up a full 8% return, 8 versus the 16, just to say that I'm diversified in international funds. You look at the $10,000 hypothetical growth, and you're only at, give or take $20,000 versus 44. I mean, ouch. All right, so that is the international stock ETF for VXUS. We won't go to the price and performance tab. Now, the last one, I also have to rant a little bit, but the Vanguard Total Bond Market ETF, BND, because bonds, I'm sure some of you have heard, as you get older, you should, transfer your investments into more safe things like bonds, like the bond market. And now there is a little bit of truth to that, but look at the returns here. If you scroll down, the 10-year returns 2.97%. I am absolutely leaving the bonds behind unless my investment timeline is like a year to 2 years, which, let's be honest, most people, even people retiring, are not only investing for 1 to 2 years. You're in retirement, you could be lasting another 20 years. Leave the bonds behind. That return sucks. If you look at the hypothetical growth of $10,000, you're up to $13,400. You're missing out on 30 grand if you went to bonds. If you see the summary here, it provides broad exposure to taxable investment grade US dollar denominated bond market. It offers relatively high potential for investment income. Share value tends to rise and fall modestly, may be more appropriate for medium or long-term goals when you're looking for a reliable income stream. None of those really jump out to me as adding any value, to be honest. But also, I want to add long-term wealth, or I want to add value by getting 17% returns, not 3. That's not using my money to its fullest potential. So that's my rant on bonds. If you really want to be conservative and you're scared about the stock market and just want to get started, maybe this is a good option for you. But hopefully we did our job and convinced you that the VTI or the VOO is a historically proven option and will continue to be in the future at getting maybe not 17%, but 10 to 12% even, beyond what we've seen as the going rate. All right, so that's all we had in today's video. If you enjoyed this, if you could smash that like button and subscribe to the channel, again, we would greatly appreciate it. Thanks again for watching, and remember, finance is fun. See ya.